The Deutsche Bank X-Tracker Japan is a Rand-based JSE-listed instrument which tracks the MSCI Japan Index. It reflects the performance of the Japanese yen and the underlying performance of the 400 top Japanese listed companies weighted by market cap. It has a market cap of 213 million rand and a dividend yield of 1.3%. Now, after 23 years or so in the doldrums, can we finally get excited about the Japanese economy?
Yeah, it's an interesting one because, to be fair, that time 20-odd years ago was a period of sort of totally irrational exuberance, because you'll remember they thought Japan was going to take over the world with its just-in-time production and buying of assets in America and so on. It's got a low yield, which makes sense because all yields on all things Japanese are pretty low. It's a very inward economy, so most of the bonds and most of the shares are owned by Japanese citizens. The index itself and that 400 thing is dominated by a couple of big industrial companies like Toyota, a number of big sort of financial and trading houses like Itochu and Mitsubishi. And then they've got some, reasonable sized consumer companies like Ajinomoto, which makes, soy sauce and weird stuff like that. So it's not bad.
You've been studying Japanese in your spare time, I see.
Yeah, no, hardly.
Very good on the pronunciation.
So, I mean, whether or not this is the time to strike and buy Japan, I'm not so sure, because the Japanese, for reasons of their own, seem inclined not to let anything fail. In Japan, it's loss of face and all that, so they'd rather prop up some company with debts and talk to the banks and keep it tottering forward month after month.
The value investors must love this play in terms of Japanese equities.
Yes, unfortunately, the Japanese value investors have been wrong for some 20-something years, as you mentioned here. Look, I mean, the automakers...
It's got to come right someday.
Maybe not, maybe not. I mean, the Japanese have, 23 years is a long time. Someday, maybe after we retire. And also, I mean, if you look at some of the Japanese fundamentals, I mean, their fundamentals in certain ways are worse than Greeks. They're worse than the Eurozone. They're by far, I mean, if you look at a chart of Japan in terms of its debt, in terms of its GDP growth rate, in terms of its demographics, all these numbers are very, very scary for the longer-term investor. That said, I mean, there are parts of the economy that are doing rather well. The automakers, I mean, Toyota has just come back, and the last quarter was like, I think, the best selling automaker in the world here. It's overtaken the GM again after the rebound after the tsunami. But some of the other stalwarts of the Japanese economy, like the Sonys of the world and so on, they're kind of losing out. Even the automakers to a certain extent are losing out to the Koreans, to other parts of the world. The tech companies are losing out to the Americans. The auto companies are losing out to the Koreans. And I do think there's a bit of weakness in that economy. It's almost like, we've done what we've had to do in the 20th century. In the 21st century, we're going to kind of live off our wealth.
And I think policymakers, just as a short deviance to our discussion here, need to take note, low interest rates did not kickstart the Japanese economy.
Yeah, and, abusing your savers by giving them lower and lower rates doesn't necessarily result in a risk-taking economy. Look, there are many people who say, we'd like to fail like the Japanese are failing. If you live in a poor country in Africa, it'd be fantastic to fail like the Japanese are failing, because they've got a high standard of living, high GDP per capita. But again, that's because of their own propensity to save and their own willingness to fund their own government through the treasury market and so on.
What does this mean? It looks very choppy to me. Unpack it for us, Viv.
In fact, if you had gone back a couple more years, you'd see the similar thing. There's pretty much a range it's trading at right now. This is near the bottom of the range, but it doesn't go much beyond what you're seeing as being the top of the range here. And that's actually been the case of Japan for quite some time now, even in yen terms. I mean, one of the reasons we've seen an overall improvement over where the longer term was because probably the yen. But in terms of the Japanese market itself, it's very range bound. Generally, if there's a trend, it's downward. And I don't have a very positive view. I thought there'd be, even after the tsunami, there wasn't a big recovery like I thought there may be, that stimulated demand we'd see from the rebuilding.
So you really range bound on this one. You're not going to shoot the lights out one way or the other?
Most likely. And in fact, if there's a trend, it's going to be down.
Oh, this really doesn't sound good. Should I even ask you whether it's hot or not? I can answer for you, hot or not.
Not hot, mostly again because of the structure, but in this case also because of the underlying.
Viv, hot or not, DBX Japan?
Of course, not hot.